So Bitcoin, it is right on the edge of a cliff, isn't it? After this unbelievable run, the entire market is just kind of holding its breath. Are we about to see an explosion to new all-time highs? Or is this all just one big, devastating trap? Okay, let's get into it and figure out what might happen next.
And really, this chart right here says it all. You can see two totally different paths taking shape from this one critical point. You've got a massive surge up or a really sharp drop down, and the question on every single person's mind is, which one is it going to be?
I mean, the market has been on an absolute tear lately. We're talking 8 straight green weekly candles. And that's no accident. It's a massive signal that a flood of new money is pouring in, that there's some serious accumulation happening. The bullish feeling is just everywhere. But as you're about to see, that might be exactly where the danger is hiding.
So first, let's look at the bull case, the argument for why this thing could just keep on climbing. And it really all comes down to one gigantic force, the institutional engine.
$1 billion. Just let that sink in. That's how much money flowed into the US spot Bitcoin ETFs in just 6 days. This isn't just everyday people speculating anymore. This is serious long-term capital stepping into the ring.
And here's how it all fits together. First, you've got these giants. We're talking BlackRock, Fidelity, just consistently pouring money in. That helps build this whole story of Bitcoin as digital gold. But here's the real kicker. The data on the blockchain actually backs it up. You look at these volume deltas from places like Binance and Coinbase. All that really means is that buyers are being way more aggressive than sellers. And when you have that much buying pressure, day in and day out, it basically creates a safety net under the price. But what if all this good news, all this optimism, what if it's just setting us up for a classic trap? Let's flip the coin and look at the other side of this, the argument for the bears. So, what even is a fakeout? Well, it's when the price looks like it's breaking out past a huge resistance level. Everyone gets super excited, late buyers pile in thinking this is it, and then boom, the price reverses hard and traps all of them. It's pretty much one of the oldest tricks in the trading playbook. And the way a fakeout works is there's something called a liquidity hunt. So imagine the big players, the whales. They might intentionally push the price up, just high enough to trigger all the stop-loss orders from people betting against the market. At the same time, they lure in all the euphoric buyers. This creates this huge pool of cash that they can then sell into right before they slam the price back down. It is a completely calculated, almost predatory move. And this right here perfectly shows the battle we're in. Over on the left, you've got real demand. That's the ETF buying and holding actual Bitcoin for the long haul. It's solid. But on the right, you've got this firestorm of speculative pressure. That's the futures market, traders just betting on price swings. When that speculative side gets too overheated, things get unstable, and you've got the perfect recipe for a big, painful correction. Okay, so we've got the bull case, we've got the bear case. It all comes down to the numbers on the chart. We are officially in the decision zone, and these are the critical price levels that you absolutely have to be watching. And it's actually pretty simple. For the bulls to prove they're in charge, Bitcoin has to close a weekly candle above $84,000. If that happens, well, 90,000, even 100,000 could be next up fast. On the flip side, if the price can't hold $78,000, the bear scenario suddenly looks a lot more likely. That would be a breakdown, and we'd be looking at 60,000 first, and then maybe even that big liquidity zone down at 48,000. So let's go back to our map here. That green bullish path, it's unlocked only if we get a clean break above that $84,000 level. But if we fail there and we slip under 78,000, well, that red path, the liquidity hunt, becomes the main show. It's all right there. So where does all this leave us? Well, this isn't just about lines on a chart anymore. This is a real, fundamental battle for control of where this market is headed next. So the final verdict is this. The long-term case with all the institutional money looks incredibly strong. But the short-term picture, it's just dangerously overheated. And, weirdly enough, a sharp correction might be the healthiest thing for the market. It would flush out all the crazy speculation, all the leverage, and build a much stronger foundation for a real sustainable climb to that $100,000 mark. So, what's the one thing you need to take away from all of this? Forget the noise, forget the debate. It all comes down to a single number,
$84,000. That level is everything. It's the line in the sand. It's either the gateway to the next big chapter of this bull run, or it's the trigger for a very painful reset. So yeah, watch it. Watch it closely.